Hello everyone and welcome to the Ticker.com's news channel on YouTube. On this channel, we review stock markets and discuss financial news, market trends, and economic data from Wall Street to Global Street. So let us get started. Global markets continued to advance and benchmark indices on Wall Street and Europe traded at new record highs. Wall Street's upward move was fueled by a string of positive earnings, including results from Alphabet, Netflix, Coca-Cola, and General Motors. Moreover, the progress on trade talks also fueled optimism after Japan agreed to U.S. tariff revisions to 15% from the current 3%. Despite markets' enthusiasm about the Trump administration's tariff claims, sooner than later, businesses will pass on these increases in import tax to consumers. In fact, the tariffs that are so widely popularized by the Trump administration is one of the largest tax that has been put on the consumers and businesses in the U.S. in several decades. For now, these pass-throughs are not visible in the economic metrics, but as more businesses take advantage of higher inflation expectations, faster the prices will increase. Higher goods prices will certainly stoke inflation, thereby forcing policymakers to keep rates higher for longer. Let us review key economic releases this week, and we begin with the U.S. U.S. new home sales struggled to advance amid affordability issues and macroeconomic uncertainty, forcing many buyers to delay purchasing decisions. Median home prices in June declined nearly 3% to $402,000, and inventory of unsold homes rose to $511,000, or about 9.8 months of supply. The European Central Bank held its key lending rates, pausing its year-long easing cycle. Policymakers lowered rates 8 times over a year, including 7 consecutive rate cuts, as the European Union and the U.S. negotiated a trade agreement. Central bankers say trade tensions heightened the economic uncertainty and showed no urgency to consider additional rate cuts. New passenger car registrations in the European Union fell sharply in June, driven by the demand weakness in 3 of the EU's 4 largest markets. Annual registrations declined 7.3% from a year ago in June, reflecting a fall of 17.4% in Italy, 14% in Germany, and about 7% in France. Meanwhile, registrations in Spain rose 15.2% from a year ago. In the first half, total registrations declined nearly 2%, and battery electric vehicle sales rose by 12.5%, increasing its market share to 15.6%. In Asia, the Tokyo area's inflation edged down for the second consecutive month, benefiting from the easing of inflationary pressures for energy, water, and rice prices. The overall consumer price inflation was 3.2%, and core inflation, which excludes food prices, cooled to 2.9% from 3.1% in June. Water prices plunged nearly 35% for the second consecutive month in a row, indicating the largest decrease in price since record-keeping began in 1971. Core inflation, excluding energy prices, was 3.1%, unchanged from the previous month. After the government rolled out a series of measures to boost rice supply, price inflation slowed to 82% from nearly 91% in June. However, food price inflation, excluding fresh food products, accelerated to 7.4% in July from 7.2% in June, and rose at the fastest pace since September of 2023. In other economic news, retail sales in the UK modestly recovered in June after record temperatures for the month boosted supermarket stores and fuel sales as people searched for, or rather consumed, beverages and also took advantage of the wetter weather to travel far and further. On an annual basis, sales increased 1.7%, swinging from a revised 1.1% drop in May. Retail sales have been losing steam, with overall sales rising only 0.2% in the 3 months to June compared to the previous 3-month period. Let us review key events in global bond, currency, and commodity markets last week. The yield on the 10-year U.S. Treasury held at 4.44% after sharp swings earlier in the week as investors reviewed the latest trade policy developments and ahead of the rate-setting committee's meeting next week. Texas crude oil prices hovered at $67 a barrel as optimism surrounding the U.S. trade deals lifted market sentiment. Natural gas prices in Europe decreased 4% to 32 euros and 40 cents per megawatt hour and fell to the lowest level since May as the EU continues to refill storage facilities, lifting inventories to 65% of the capacity, with a goal to reach 80% by November 1. The euro hovered near the August 2021 highs at $1.17 after the ECB held its interest rate steady amid heightened uncertainty linked to the US-EU trade agreement. The Japanese yen, gained 1% to 147 against the US dollar as the market digested the implications of the new US-Japan trade agreement. Let us shift our attention to major stock markets in the US, Europe, and Asia. The S&P 500 index and the Nasdaq Composite gained for the fifth consecutive week after big tech companies delivered strong earnings and trade talks hopes. European markets advanced for the third consecutive week after the ECB held rates for the eighth time over the last 12 months. The Nikkei 225 stock average rebounded 4% after the U.S.-Japan trade deal with a 15% tariff rate lowered tensions and removed uncertainty linked to the international trade policy. Hong Kong and China market indices extended weekly gains ahead of the start of the next round of bilateral trade talks with the U.S. this weekend. India market indices declined for the fourth week amid lingering uncertainty related to trade talks with the U.S. and weakness in financial and technology stocks. We now shift our attention to merger deals, market movers, and earnings updates from leading companies last week. The FCC approved the $8 billion merger between Paramount Global and Skydance Media after Paramount paid $16 million to the U.S. president to settle claims. Intel reported second quarter results that beat revenue expectations, and the company slashed its foundry investment target. Ameriprise Financial reported better than expected quarterly earnings and declared a regular cash dividend of $1.60 per share. General Motors reported stronger than expected quarterly results and retained its tariff-linked expenses estimate of as much as $5 billion this year. Tesla reported a 23% decline in profit on a 14% fall in revenue in the second quarter as the company's performance suffers because of the reputation of its chief executive Elon Musk. ServiceNow reported strong quarterly results and revised higher its annual outlook following new client acquisitions. Hilton Hotels reported strong quarterly results and returned nearly $2 billion to shareholders in the year-to-date in July. LVMH, the French luxury giant, said a larger-than-expected decline of 9% in its core fashion business drove the decline of 4% in its overall sales in the second quarter. Volkswagen reported a decline in profit in the latest quarter and lowered its 2025 outlook. Puma plunged nearly 18% after the athletic footwear maker said its annual sales are estimated to decline by a low double-digit percentage and operating income to swing to a loss. In the week ahead, U.S. investors will remain focused on the fresh batch of earnings from leading tech companies, including updates from Microsoft, Meta, Apple, Amazon, Visa, MasterCard, PayPal, and Boeing. On the economic front, the Federal Reserve is widely anticipated to hold key lending rates. The Bank of Canada and the Central Bank of Brazil are set to announce their rate decision. In Europe, investors are awaiting second quarter GDP and inflation data from the Eurozone, Germany, France, Italy, and Spain. On the earnings front, investors in Europe are looking forward to the results from L'Oreal, Nordex, Safran, AXA, Daimler Truck Holdings, Unilever, Shell, Sanofi, Rolls-Royce, Barclays, UBS, British American Tobacco, Airbus, and Christian Dior. On the economic front in Asia, the Bank of Japan is set to announce its rate decisions, and Japan's government is scheduled to release jobless rates, retail sales, and industrial production data. China is set to release its business activities surveys and industrial profit data, and India is anticipated to release its industrial output data. On the earnings front in Asia, investors are looking forward to corporate results from Nintendo, Itochu, Tokyo Electron, Toyota Motors, Mitsui & Company, Marubeni, Samsung Electronics, CATL, L&T, Asian Paints, Shimano, Bharti Airtel, Tata Steel, Hyundai Motors India, and Singapore Airlines. You can review daily U.S. and global financial market news, stock movers, earnings releases, SEC filings, and economic updates on ticker.com and 123jump.com. You can find the latest financial books on Rodera.com, keep up with financial industry events on eventsinamerica.com, review ETF and mutual fund performance and in-depth profiles on tickerfundsbook.com, and review market updates and stock movers in India on niveshak.in. That is all for today, and we will see you next